And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. It's Friday, March the 18th. Happy Friday, everyone. My name's John. Thanks for trusting me with your time. Last day before my vacation. I'm looking forward to taking a little bit of time off. I've already resigned myself to being very cautious today and not trying to blow anything up before I go on vacation. As always, seeking accurate context, always thinking about risk management first, and trying to remain patient in my trading today. If you're already in the markets this morning, hopefully things are going your way as far as economic numbers are concerned. A couple of smaller numbers this morning at 9 o'clock Central. We have the existing home sales coming out and what we used to call on the trading floor misleading indicators. So we'll be looking forward to seeing that. It is quadruple witching today. We've got expirations at noon for all the equities and options. Sometimes that can create some market gyrations, possible opportunity, and always remember the risk involved with that. As far as what traders are thinking about this morning, the president is expecting to warn China against any support for Russia. We're going to have to see how that goes. Russia has avoided default on their debts, at least for now, bringing some to question if the sanctions are enough. The U.S. equities are set to open lower this morning, looking still in range and everything. Well, hey, Lacey. Lacey says good morning, everyone. And crude higher on fears of escalation in Ukraine, and we are, I know, all hoping and praying that that doesn't happen and we can get back to peace and freedom for everybody. As always, make sure you hit that lucky like button, share, comment, question, feedback, heckling, and love are welcome here at the Market Forecast, as well as subscribing to our YouTube channel so you get notifications when we do go live. Taking a brief look this morning at the VIX, the dollar index, and the yield on the 10-year VIX up a little bit, taking a nice hit yesterday with that big push to the upside. Currently, last I checked, trading $26.48 dollar index up slightly at 98.41, and the yield on their 10-year actually a little bit lower this morning than where it settled yesterday, 2.16%. You can say good morning to everybody. I noticed my brother Rick is the first one in the room this morning. Rick, you win the prize. Love you. Scott Saw is here with us, and Scott Saw, and he conquered. Ricardo, good morning, Spencer. Brian, Spence talking about OPEX and index rebalancing today. Yeah, there might be some funny price action today in the equities, 100% sure. Dan Trader, good morning. Shaw, good morning. Janus, Tachyon, Amplifier. Theo, good morning. Manuel, Marcelo, Mirek, James, Taurus Trader, Luis, Terry King, Isaac, Alfred, George, Bud, Brody, Frederico, Expediter, Dean, Trading Research, good morning. Al-Haji, good morning. Dave, Devant, good morning. You have the thermostat up. Why? Because I'm wearing a t-shirt, not wearing a sweatshirt. I'm preparing myself for vacation. We're going to be going a little bit further south from where I am now. We're going to be down near the Missouri-Arkansas border. Hopefully it'll be a little bit warmer there, but I'm preparing myself. Jay Crockett, good morning. Sarah, fine looking dawn for you as well. I'm hoping for good trading for everybody. Johnny, good to see you. Harry, Three Lions Insight. I know there's a war in Ukraine. How can you take a vacation? Well, we all need a little bit of time off. Good morning, Nico. Hey, Lacey. Everybody, Nico says good morning. What is the VIX for? Well, VIX is a traded product. It's an indication of the volatility The VIX I look at is, of course, for the equity volatility. It's a fear factor. How's it used in trading? Well, the higher the VIX number, the more volatility you can expect. The wider ranges, bigger moves. Just yet another nuance that we try and keep in mind as we're trading. James, good morning. Quadwitch day today. Yes, it is. Good vibes this morning. DK to you too. Dan, good morning. Chris, happy Capital Preservation Friday. Absolutely, they always are. Michael Knight, get some local honey for those allergies. There you go. And a happy blessed Friday to you too, David. If you're new to the market forecast, welcome. We're always, just looking at these markets, seeing if we can figure out some sort of accurate context, thinking about our hypotheses, and when those hypotheses ring true, hopefully we've got a strategy in place for those hypotheses. Typically on Friday, I'm going to be trying to just make a little bit of money and then call it an early trading day. I've got things to do all day. Going to be leaving town on Sunday, so we got a little packing to do and start the vacation off. And don't think that I won't be thinking about you. I know you're going to be in the finest of hands. John Doherty, JD, the Dancing Bear, is an extremely intelligent, great trader. He looks at things a little bit differently, and I'm excited for you guys to see JD in action and take a look at the way he looks at markets. I know I'll probably be watching because that's just how I am. I may be on vacation, but back in the back of my head, I'll be thinking about the markets and, of course, thinking about all of you. When I get back, I'd love to hear some success stories of the time that I was gone. I'm going to be gone all next week and the following Monday. So a week from this coming Tuesday, I'll be back. And we're thinking about adding another Make Hogue Money on Tuesdays. So it'll be Tuesday and Thursday where we'll have that opportunity. If you joined yesterday, it was kind of a rough morning. We were looking at the S&Ps opening below a late spike, but boy, it sure did not spend much time below that late spike. The first half of the trading day, it spent inside the late spike, which again marks acceptance of higher pricing, and that's what the market did by the end of the session. A couple losses yesterday and Make Hogue Money. That's okay. I made a little bit of it back for us throughout the day, and so we'll be taking a little break from Make Hogue Money next week, but we'll start again probably on Tuesday. On the day I get back, we'll add another day. What else have we got going on? Don't see JD here this morning. Maybe he's getting a late start for us, but I'm really excited to see JD in action next week. I think we're all going to learn a lot. And not only that, he is one of the nicest, sweetest men you're ever going to get to know. So I'm looking forward to everybody having the opportunity to spend some time with JD. All right. What are we looking at this morning? We got our markets, S&P, Nasdaq, crude oil, gold. We've seen some changes. We've seen some open interest coming in. We're going to take a look at that here very shortly in the charts. All right, I've yammered enough. Let's get set up and jump into the charts. I got to click about 15 things here. I'm working on improving some of the hardware that I'm looking at. Let's go. All right, so this is the daily for the S&Ps. Should be 100% in the June contract as the March contract expires today. We don't want to have any positions upon expiration, of course. Yesterday, we had the market kind of, we're going to take a look at that on the 30-minute chart just to kind of go over what we're looking at on the daily. We've closed above an important inflection level, that weekly kickoff high, 43.64, supporting us last night as well within about a couple of ticks of it. We're inside an extended trading hour range today. We know we have expiration, and a lot of the focus is going to be on getting a cheap expiration, finishing the roll in a cheap way for our longer time frame traders. There's still going to be about 450,000 contracts in the March contract that are going to either roll or expire and settle in cash. It's a little bit lower than the last time. Last time we had about 500,000 contracts that rolled or expired on the last trading day. And I think we're possibly coming back into some resiliency. I mean, we know that there's still the same uncertainties in the world. We know that there's a war. We know all these things. And once we get done with the fear from that, the market just has a tendency to continue to rise to the upside. There's a natural upside move to the equities markets because the vast majority of investors are trading buy side only. So if we're not dumping, we're buying back in. I don't know what's going to happen. Anything can happen, especially on quadruple witching day. Let's take a look at the 30-minute and discuss what happened yesterday. So yesterday we had the late spike, 43.43, I think was the base of the late spike. And we did open below the base of the late spike, which does give a hint or a tendency for the market to reject higher pricing. But by the end of the first half-hour period, we had taken out the high of the previous day's session, hadn't taken out the overnight session. But when we got up here and finished that first 30-minute bar up here, we really started ranging inside the late spike. Now, when we're thinking about acceptance or rejection of price, if you're looking at it from the market profile, you're looking at it through time. It's the time we were spending in the late spike after opening below it that marked reacceptance of higher pricing, and we saw what happened for the rest of the session. Today, we have yet another late spike. The base of that late spike is 43.93. Okay, we're opening we can be pretty sure we're going to be opening below the base of the late spike. Again, below the base of the late spike. So what I'll be watching for is I'll be thinking about maybe finding some fish down here at weekly kickoff high. It was supportive overnight. It had been resistant up to this point. Now we closed above it. It becomes a potential support level. Now we're going to see if we can't bring price back up into the late spike. If we do spend time up here, that may mark further acceptance of higher pricing and bring price higher. We have some overnight inventory, perhaps a little bit to the short side, not a whole bunch of inventory. We haven't moved that far since yesterday. Overnight, kind of a small range. So no real overnight inventory with which to look for, and we know that our settlement price was all the way up here at 44.02. We lost 29,000 in open interest on this move yesterday, but it's rollover and it's expiration today. Very difficult to read volume and open interest in this case. Next week, you guys won't have to worry about that. We'll have real open interest and volume information that we can begin to trust again. Trust? Well, I don't know how much we can trust it, but we can begin to believe that information is a little bit more solid, real, because we don't have the expiration and the blur between the volume from the two contracts and watching the rollover happen. So we may become more directional next week. Not that we haven't been directional since the beginning of the year, which has been really tough on a lot of traders. When we go back and we look at the daily chart here, let's even go further back than that. Let's look at the continuous chart. Okay, here's the COVID dive. Since then, basically every opportunity to catch a break in this market has been a buying opportunity until the beginning of the year. We've put a different market state. It's a different look. It's a different series of patterns that we have to learn to use to our advantage. Is it changing? It's quite possible that is changing in a longer time frame, but that still doesn't change the fact that we are always adapting to what the market is telling us. The market is talking to us. How do we listen to it? We need to listen to it consistently. People ask all the time, how do I become a consistent and profitable trader? To which I answer with another question: what are you bringing consistently? When I'm looking at the markets I trade, I have an outline that I follow every morning. I use this outline religiously, and it gives me the consistency to be able to view the market in a consistent way and hopefully use those nuances, determine which nuances are most important in the current context or market state, and then trade to those most important nuances. Today, our nuance, early opening below the late spike. Very short time frame, but if we can't reaccept inside the late spike the way we did yesterday, I'll look for this market to perhaps fail to hold price above the weekly kickoff high and a move to the downside. Am I in a hurry to do anything today? No. We're in the middle of the value area from yesterday. When we're in the middle of value, there's very little change in the perception of value, and I may find better trade locations as the day goes on. Lower highs, lower lows. Yep, that's the market state we're in. But are we at risk of changing that, my dear brother Rick? Are we at risk of changing that market state? Subjective. Nobody knows for sure. Anything can happen. That's our acronym, ACH. If I was to get back on the floor now, I would change my acronym from HOG to ACH. Anything can happen. Let's take a look at crude oil. We've got our opening range has completed. We've got our head and shoulders. Our shoulders are here. We're really kind of hanging back here above the neckline. Are we going to break this structure? Well, we've got May contract today. If you're still trading the April contract, please move into the May contract. You're going to be very thin, very, very low liquidity in that April contract. Yesterday was the last day I was trading April. Today, absolutely 100% May. There is a $1.30 discount in May from April, so adjust your levels appropriately. We are right back at weekly kickoff high, which is weekly kickoff low, I should say, which is $103. We took a look above it last night. We're back down below it. We traded to it yesterday in the May contract, losing 22,000 in open interest. Again, maybe we got too short down here. Maybe that loss in open interest has more to do with the rollover than any short covering that may have happened yesterday. Maybe it's a combination of both. But again, because we're in rollover, that line gets blurry. What do we see on the 30-minute chart? Okay. So you look up above that $103 last night. We're back down below it. We've opened in range. We've opened in value. We don't have any real overnight inventory because the market had adjusted or reconciled that overnight inventory before the regular trading hour open today. So here we are. We're in range. We're in value. We're right near settlement. No runs, no hits, no errors, no overnight inventory, and no reason to feel compelled to do something really early today. $103 is an important inflection level. There could be some fish up there. But again, because of where we are in range and in value, I'm going to be patient. We are looking for information from OPEC. I saw on Twitter the compliance percentage for OPEC in February is an assumed 135% compliance. The heck does that mean? How are you more compliant than you can be? Let's see if we got an opening range trade here. I'm not thinking about the opening range trade today, which probably means it's going to be a good one. So far, the opening range, the high, the regular trading hour session, it's 35 ticks wide. Do we see that we have a potential for 70 ticks off the opening range here this morning after opening in range and in value? I don't think so, which means it's probably going to happen. It's the way it goes. If I say something is not going to happen, that makes it happen, just the way the markets are. Markets are poltergeists, ladies and gentlemen. They know what scares you. Expiration, again, yesterday our move right up to weekly kickoff high. This market has been presenting as weaker. It is slower in approaching any potential market state changes. Wednesday, we had step one of a market state change by closing up above this trend line. Step two would be closing up above the weekly kickoff high, which we did in the S&Ps, but not in the Nasdaq. What is a trader to do? We added 400 in open interest yesterday. Woo! But again, we're in rollovers, so that line gets blurry. Yesterday, it was a different situation. Yesterday, in the Nasdaq, we opened in the late spike. Maybe something we could have or should have noticed in trading the S&Ps. We opened in the late spike. The Nasdaq has been presenting as weaker, but actually opened in the late spike, which would tell us the market is primed to move higher and accept higher pricing. So we didn't even have to reject below the late spike in the Nasdaq. It happened real quick for us, and we ended up ranging in the late spike, similar to the S&Ps, accepting higher prices over time, and the market did move higher and put up another late spike here. That's 3 in a row. Didn't we do 3 in a row? Here's a late spike. Here's a late spike. The market is late spiking higher. Are we perhaps going to see some profit taking from longs? Did we get that many longs into the market? Again, a blurry line because of rollover. I hate rollover. Directional traders in the S&Ps back in the day used to take 2 weeks of rollover off. Just becomes very cantankerous, the market. It gets tougher to trade. Here's the 30-minute. We're opening below the base of the late spike. If we can't reaccept inside the base of the late spike, that is, and the base is 14,092. 1492, Columbus sailed the ocean blue. 14,092 is the base of the late spike. So if we can't get back up and trade up to that late spike, accept that late spike, get a shot at the weekly kickoff high here, which is 14,135, the way we did yesterday. That was right at the close, right into the close here, 14,132.50. So we got within 10 ticks of it before closing the extended trading hours yesterday. Opening below below the late spike, in range and value. What does that tell us? Very little change in the perception of value. Be patient. Be patient today. We don't have to knock it out of the park today. We don't even have to do anything today. We don't even have to have a reason not to do anything today. Not doing anything is a position. Be patient today. Patience, 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 patience. Did I mention being patient? Gold. Okay, settling into the right shoulder. Shoulder, head, shoulder. You start to break to the downside. This is looking more and more like this would be our neckline. Now we're kind of inside trading extended hours today. Open interest, we lost 1,000 yesterday. Woohoo, big deal. Although we are now coming into rollover for gold. A week from Monday is scheduled to be switch day, and we won't be going from April to May. We'll be going from April to June. May is a kind of a bastard contract, doesn't really trade much. Gold is one of those products that has those. So open interest moot, volume lower. Are we coming into rollover? Is that why the volume is decreasing? Now we have that question in gold. Can't wait for these rollovers to be over. Take a look at the 30-minute. Opening range, neither the high nor the low of the session. No gap. Weekly kickoff. What is this? Weekly kickoff low. Resistant, supportive. There might be some fish down here. It might be an interesting opportunity for us at the very least. Again, the opportunity for us to limit risk is always present near these weekly kickoff levels. Open overnight inventory a little to the short side? Maybe. Still in range. Bordering the range low from yesterday. Not seeing any huge opportunities here today. I'm going to really try and stay patient. If I get an opportunity near weekly kickoff low, I might look at it. If we start to head towards our overnight high, yesterday's point of control or value high from yesterday, we might see some fish up here as well. But again, I'm going to try and stay patient. Did I mention patience? You guys probably get sick of me saying that, but it's so vital. All right, Euro, 2 days straight of increasing open interest. We added 5,000 yesterday. Breakout of the trend line, yes, check. Retest, check. Failure, check. Volume was really just okay yesterday, so I'm not really all that impressed by the amount of volume on this breakout above that trend line. Maybe that's why we're heading back towards it. But what this is creating is just now a longer short time, really a longer short time frame. Does that make sense? A longer short time frame area of balance. I had high hopes to take this off the back burner, and I still do because we're seeing open interest coming in. Take a look at the 30-minute chart. Rick, I'm leaving that trend line there just because you keep telling me to change the trend line. You're killing me. All right, so we get our breakout. We get some continuation. We bring in some open interest. We don't really bring in that much volume. We've opened with a gap, okay, back below this trend line now. Does this mean we're going to head and check down to this trend line? Maybe. What it tells me is we're in range and we're back in range and back in value in a longer time frame. We got our high here. Look at our high here. Got too expensive. Didn't quite make it to weekly kickoff high. What doesn't happen is equally as important as what does. Right back into range. You're going to have to stay patient. We do have some overnight inventory to the short side. This is no longer valid. I'm going to take this and that right there because we did recheck that naked point of control 2 days ago. Our next one is here. Maybe this is just the visual that this market is heading towards. I don't know. Did I mention patience? I don't remember. Here's the 10-year. We had how many days straight, one time framing to the downside? The speculation is if we've got a whole bunch of shorts here, are they going to maybe before the weekend take some profits off? We continued to add open interest instead of losing open interest yesterday, adding another 63,000 in open interest. 3-day balance now. Inside extended trading hours. What does that tell us? Well, we're going to be working balance rules in that case. Balance. Here's the 30. ZN, that's the right contract. Okay, inside. Extended trading hours. Overnight inventory, no runs, no hits, no errors, no inventory, nothing, nobody left, nothing to do. We're inside value. We did take a look down towards settlement. Supportive for any reason other than the fact that it's settlement and it's a visual target? Probably not. Right now, we're inside range, inside value. I'm not going to say it. You know what to do. Better trade locations may come as the day goes on. And let's take a look at the natural gas. Bit of an enigma lately. That's an industry term. An enigma is a puzzle you can never solve. It kind of says it for trading, doesn't it? Open interest and volume. Nice little spike in volume on this push to the upside. We added 9,500 in open interest. What does it mean? What does it mean? Spock, what does it mean? It means that there's interest coming in, but it doesn't change the fact that we're still in range, we're still in balance, we're still in short time frame control. Take a look at this 30. In the bigger time frame here, we've got lots of overlap. We came up, checked a naked point of control yesterday. We created a gap down below. We've got another naked point of control up here. We've got a gap. We've got another naked point of control down here. We got another naked point of control here. We got another naked point of control. There's a lot of weak structure below this market. We may need to kind of cover and revisit those levels before we've really become directional. And that said, anything can happen. ACH. That's our new acronym, ACH. Anything can happen. Where are we now? Inside value. No real overnight inventory. No urgency, no runs, no hits, no errors, nobody left. It's the top of the 7th. Well, actually, it's the top of the 9th today. And it's a tie ball game. Who's going to win? Who knows? I'm not in a hurry. I'm going to keep telling myself that today because I've ruined a few vacations just by being over aggressive and trying to pay for the vacation in the last day before I go on it. So, Friday, let's make a little money. Anybody who's still in the pit after noon is down money. That was one of the things we used to say on the trading floor. Found myself trading till 3:15 on a lot of Fridays. It's just part of trading. And I'm going to miss you. I'll be thinking about you. Again, I know you'll be in great hands. I'm looking forward to watching and learning from our good friend and excellent trader, John Doherty. Very sweet man. I think you're going to really enjoy him. And I know I will. I guess that's about it. Let's take our deep breath. Stay humble, grateful, and creative, and flexible, and patient, and all of those words. Trade well next week. I'm looking forward to hopefully hearing some really good success stories when I get back. I'll be thinking about you. I'll miss you. Make sure you continue to pray for peace, strength, and freedom. Be kind to yourself. Be kind to each other. Wash your hands. Say your prayers before you go to sleep. Make sure you brush your teeth and wash your face. And be good. I feel like I'm leaving forever. It's kind of emotional, but that's the way these markets are. We're so happy to get away and so happy to get back, and I know I will be too. So trade well, everyone. Looking forward to seeing you a week from Tuesday. Have a good one. I'll see you in the pit in just a few minutes. Let's finish up this week strong. And have a great week next week. Blessings to all of you. We'll see you soon.